we do have Peter McGuire, who's the CEO at AustraliaTrading.com, joining us on the show. Peter, a very good morning to you. Thank you so much for taking time out and joining us bright and early this morning, at least for us.
Well, good morning, Shreyanti. Yes, it's happy Thursday from Sydney.
Well, absolutely, So first things first, I wanted to try and understand what you think about this particular move. Of course, it was widely anticipated, but what do you think this time around really forced the Fed chairperson's hand?
Well, I think it was a couple of things. First off, there was internal pressure from the market, and I think that the market was very much, 95, 98% baked in of a 25 basis point cut. And the Fed chair delivered on that. He was very conscious as far as unemployment numbers and the health of the employment market. Secondly, he had serious pressure, probably from the Trump administration, when I look at the likes of Scott Bessent, Treasury Secretary, and of course the president himself. So they've seen that 25 basis points stripped out. Now we're between 4 and 4.25%. And I would think, Shreyanti, that moving forward, you'll probably see another rate cut over the rest of this year, if maybe even another one. So we'll just have to wait and see how it all moves forward.
And going forward as well, one thing that really stands out to me in terms of commentary is the tariff commentary that has come in, right? Growth, in fact, has been wobbling under the weight of tariffs. You did have Powell as well hinting that the impact could be short-lived, but there's a case for a bigger impact as well. So what do you make of this particular commentary there?
Well, that's exactly right. I mean, Fed Chair Powell's got his own views as far as the tariff and how that's going to roll out. And he's conscious in the sense that, we're only early days as far as tariff income, and he wants to see the impact that's going to have naturally to his own economy and how it moves forward from a global perspective and what happens as far as whether they're going to be renegotiated, the long-term, I suppose, the performance of them. And this is the issues that he looks at. So he's got his hands full in a lot of ways, and he's conscious of trying to steer the economic ship in the right way over the next matter of months, because he's only there for about another 6 or 7 months, and then his tenure is finished.
Well, absolutely. That's something that we're looking at in terms of his tenure as well. So how does the rate cut really, according to you, play out for the US dollar and treasury yields, and what does that signal for equity markets globally as well?
Well, I think first off, Treasury yields will continue to soften, and that's been very evident with the 2 and the 10-year. The second part of it is US dollars come under pressure. It's bounced a little bit in Asia trade this morning to the upside, but there's certainly pressure, and it's now in that 96 handle as far as US dollar index. I would keep a close eye on certainly precious metals, and then you've got to look at the equity market. We've had a relatively strong move. The Dow was up, S&P was off a little bit, and NASDAQ, but I think the overall momentum is going to be that continued uplift as far as US equities. And let's just see where there it is there, nearly 0.6% up, 0.57 for the Dow. That was very strong, and the futures have been well, I think, interpreted. So, it's not as though the futures, and this is for all the viewers, are not performing in the sense of uplift. They are performing, and that's a good sign, I think, for equities.
Well, absolutely, Peter. And before we let you go, I can't not ask you about gold as well, especially on a day like this, because you do have gold scaling another record high, another day, another record high coming in for the precious metals. This was largely on expected lines, because you did have that impact that we were penciling in from this particular rate cut if it went ahead, which it has. But what do you think is the way forward when it comes to gold? Do you see more shine as well in store?
Well, Shreyanti, look, we've punched through 3,700 and it was very convincing. We're now at about 3,690. I'm looking at that on COMEX. So I feel as though this momentum to the upside is going to continue leading into Christmas. The next target's got to be that 3,800 handle and then 4,000. So let's just see the momentum and what happens over the next matter of... The market's got to inhale this Fed cut and then gauge itself moving forward. We've still got 3.5 months to run till the end of the year. And, the current momentum has been extraordinarily bullish. So I would think that will continue leading into December 31. So, yeah, all hands on deck for gold.
Seriously, that's something that we're looking at as far as gold is concerned. Thank you so much, Peter, for taking time out and joining us.